All I can say is, wow, this is going to be a crazy day today. It is triple witching Friday, all kinds of options expiring. And of course, Tesla I didn't look it up today to see if exactly today Tesla is the number one most option traded stock, but generally speaking, it is. So this could be impacting Tesla today. Whatever's impacting Tesla today, so far, it's a really good day. So I'm now calling it. Yesterday was a profit-taking day. That's why Tesla was down. And I'm also calling that I'm right about this, and we're gonna this is gonna be the most obvious next 7 days in history because everybody knows that Tesla's gonna beat on the cars. Well, no, everybody doesn't know. Wait a minute. Oh, you mean the street doesn't know it yet, and really good analysts haven't adjusted their numbers yet? Oh, I thought that those really good analysts know so much more than we do. Well, anyway, we know that the actual car sales are probably going to be close to 500,000, maybe even over 500,000, but the street's still at 445. And as the street wakes up and starts adjusting their numbers, then we're going to see increases in not only the estimated share price, but also in the estimated earnings. As that happens between now and the 2nd of October, I think we'll see a continuing increase in the price of Tesla stock, certainly to the 440 level. The 440 level, I think, is, as I said yesterday, going to be a hard one to crush. But if we do get through 440, as Brian said, as Nicholas says, I think pretty much everybody on this channel that makes these kind of predictions says, if we crash through 440, there's nothing to keep the stock from. It's just going to go straight up to all-time high. Could that happen by October 2nd? Yeah, it could. So therefore, there's a whole bunch of analysts out there that are under 500 in their predictions of Tesla stock for the next 12 months. Those predictions are going to look rather foolish when the stock is sitting at 488 or 480 or 500 or something like that over probably the next 30 days. So I would expect to see lots of additional then after October 2nd or after we hit all-time highs. You're going to see a lot more people revising their price targets higher. Now, what should they be raising their price targets to, you might ask? Well, I'm saying the price target for 2026 should be at minimum 1,000. So look for some people to start putting in their numbers. Maybe it's 600, 700, 800. I think there's no way we won't be at 1,000 by the end of 2026. In fact, you may have heard me say earlier, I think we'll be at 2,000 by the end of 2026. And depending on exactly what happens with robotaxi over the next few months, we will be at 1,000 by the end of this year or by February 1. You know, I'm always looking at that February 1 date. A few days after the earnings call in December is going to be a time that I'm always going to be looking at. Now, that brings up another thing. Trump is now recommending this is, people underestimate this guy. He is a financial genius, probably maybe the financial genius of our time. This will be the crazy part that maybe the historians, maybe the economic historians will talk about 10 years from now or whatever. But there are some people right now that are getting it, people like Besant, who is obviously everybody had agreed when Besant came in. No, he's the real deal. And Besant says that Trump is a financial genius. Well, what he's doing is once again proposing something that nobody else is talking about or thinking about. He's saying, hey, we need to go to twice a year on earnings calls, earnings reports from the corporations. And this would reduce the amount of tension every quarter of the stock companies trying to come up with their numbers and figure out what they're going to say in their calls. I don't know how I feel about it. I do think that the United States might be a little crazy in terms of these, requiring these quarterly efforts. On the other side of the coin, maybe that's a really good thing. Maybe it keeps everybody's mind laser focused on getting stuff done all of the time. Anyway, we also had this morning very, very good news. I'm sure that part of the reason Tesla's up this morning, well, a substantial reason why Tesla's up this morning is because of what I was just talking about, an increase in a price target. Baird has lifted its target by a mere 71% to 548. He says there's a physical AI inflection ahead. Goldman Sachs also raised its target on strong deliveries, but I think we're much more interested in the overall, not what's going to happen on October 2nd. You and I are more interested in what Baird is saying. Tesla stock climbed early Friday after a new influx of optimism from Wall Street. Baird upgraded the shares to buy, hiked its price target by 71%. And Ben Callow was the most aggressive. He set his new target at 548, up from 320, and pointed to what he called a coming physical AI inflection. In his view, Tesla is about to enter a new era, powered not just by cars, but by self-driving taxis, humanoid robots, and a rapidly growing energy business. Goldman analyst Mark Delaney was more cautious. He lifted his price target from 300 to 395, but kept his hold rating. Even as Delaney expects Tesla to deliver 455,000 cars in the third quarter, he's way low, which would top consensus estimates of 445. Some people say 445. I've seen other street estimates of 431, so I'm not sure which one is true in terms of the overall street. Stronger U.S. EV sales in September, boosted by customers rushing to capture the federal tax credit before it expires, are a big reason why. Well, Tesla stock was trading at 421 in the pre-market. Yeah, we're way past that now. Following a run of 7 straight winning sessions that added 23% to market value, the latest gain puts Tesla close to a key resistance level. A key resistance level of what? Oh, 440, which traders see as the next real test. That's what I've been saying for how long? The upgrades come at a time when Tesla is already enjoying a burst of good news. CEO Elon Musk disclosed a $1 billion stock purchase earlier last week. We announced it on Monday morning. That's right, earlier this week. The company appears ready to expand its robotaxi service from Austin to Las Vegas. Why are they mentioning Las Vegas when there's all these other cities that came before Las Vegas? New York, Chicago. And the Federal Reserve's rate cut has lowered the cost of auto financing. Each factor adds fuel to the fire, adds fuel to the rally. Anyway, however, not everyone is convinced that the surge can last. Tesla stock is now trading well above the average Wall Street price target of 314, which means analysts as a group expect downside. Only about 45% of the analysts rate the stock a buy, compared to 55% of the broader S&P 500. All that from TipRanks. I'm sorry, that's all from TipRanks this morning. Baird's Callow sees a very different story unfolding. He urges Tesla is sitting on a stack of potential breakthroughs from AI-trained robots like Optimus. We know all that. The idea is that Tesla no longer just a car company. Whether these catalysts materialize is the big question. Tesla still faces stiff competition from Chinese EV makers, uneven delivery growth, and questions about execution. But if the company delivers or even part of the AI promise, analysts like Callow believe the stock could leave today's price levels behind. Analysts remain sidelined about Tesla stock, with a hold consensus rate baiting on 13 buys, 13 holds, and 8 sells. The average Tesla price target, I said that, 314. Baird also added this according to Grok in their note. It said the base bear case, 5.5 trillion valuation by 2035. 2035, that's $1,400 a share. The bull case, $12 trillion valuation, $3,000 a share. These account for a dilution from Elon Musk's potential additional shares. Now let's take something between those two. Let's take 7.5 trillion valuation by 2035 and do a 14% interest rate. Using 14% interest rate, get me back to the current valuation based on that. I'll wait while you ask Grok. I didn't do it, but maybe I'll do it later. MarketWatch adds more to the story. Our exercise and model assume, this is Baird again, assume a time period of 10 years, 26 to 2035, with each product goal being achieved at the end of the period and straight line volume growth. Musk's proposed package does still require many more cars to be sold, a cumulative 20 million, in fact. We estimate that Tesla will have delivered a cumulative nearly 8.7 at the end of 2025. With that as a baseline and a goal of 20 million vehicles delivered, a potentially surprising implication is a negative year-over-year growth rate in deliveries through 2035, only about negative 5% annually. Tesla must also reach 10 million active full self-driving subscriptions, which can be achieved by 2035, reckons Baird, if the 20 million of vehicle sales have 50% choosing to get the software. Then there's the target of 1 million bots, not specifically Optimus robots, as some initially thought. It's more like a general term. Leads Baird to believe Tesla will have additional real-world AI products in the future, said Randy Kirk multiple times. However, they add, for the sake of our exercise, we assume only Optimus and infer economics based on Tesla's comments regarding a $20,000 per unit cost. Okay. Barron said this morning. It says Tesla is approaching the top of its trading range from earlier in 2025 near 440, which was the mid-January high and now represents key resistance, says Cap Thesis founder and market technician Frank Capillari. Yes, 440 is going to be tough. We will probably be looking at 440 next week, if not today. I mean, we could be looking at 440 today. Wouldn't be shocking. But I think we'll be looking at 440 next week. And the question will be, how many analysts raise their price targets? What do they raise their price targets to? What do they change in terms of their earnings per share estimates? What do they say in their analysis? I'm kind of surprised we haven't heard from Dan Levy yet. What is he thinking? He's at 500. I think 500 is no longer meaningful in terms of a price target. So we'll see what happens next week, but I think 440 is going to be tough to get through. By the way, this is Randy Kirk. You know what to do. Please do it. I'll stop. I'll wait. I'll take a second while you hit the like button and all that stuff. Nobody's, I stopped asking you to sign up for Patreon, so you stop signing up for Patreon. So today will be a good day to reflect on whether this channel is providing you with any value. If it's providing you with some value, yes, it's true. Lots of people already are sending me money in Patreon, but does that let you off the hook? Because the mainstream media knows that most people don't read anything more than the headlines, well, then they lie or mislead or clickbait or whatever it is that they're doing over at CNBC. CNBC, I read CNBC every day. I just have to read through their junk because look at this headline. The headline says, Bessent made mortgage claims similar to the ones Trump cited to try to fire Fed's Cook. Bessent made mortgage claims similar to the ones Trump cited. So if you read that headline, what are you thinking? You're thinking, well, Bessent's a fraud too. We need to get Bessent out of there. We need to fire him. Is that what the implication is? Oh, well, then if you read the article, you find out that Bessent, he did do two mortgages. He did two mortgages at exactly the same time, I think on the same day. He did it on two properties. He did it at the same bank. The bank says we're well aware of it, and the documentation proves that they were well aware that he was doing two properties on the same day, which he was claiming to be his primary residences. He got no zero difference in rate based on the fact that that was the claim that was made. The documentation shows that he was going to be using those as secondary residences. He wasn't going to be renting them out. Apparently is not renting them out. These are just residences that he owns, and that the bank had no plans, not only no plans, but has not resold these hasn't resold these loans to anybody else. So for whatever reason, the bank chose to set up the loans this way, which they keep on their books. There was no fraud. Oh, that's the big difference. There was no fraud and there was no benefit to Bessent, unlike Cook, who did fraud and where there was a benefit. Everything lining up, that could have been in the headline. Everything lining up for Trump's golden age, says Randy Kirk. This is me. This is my story right now. Everything is lining up. Here are the 9 things that are just all lining up for the golden age and why the stock market just can't even find a high. Huge investment, number one, in onshore manufacturing. We haven't seen the beginning of it yet. There's $17 trillion coming for investment. We added to all of that investment last night with a deal with the Brits where the United States and Britain are going to get together on nuclear and build 12 plants. They're going to be using American technology, American products, et cetera, et cetera. I don't know all the details yet, but I think it was I want to say $250 billion deal. Anyway, so many deals that Trump has put together that are coming. Some of them are already happening. Some of them are, will take a few more months before they can break ground because it takes time to plan these things out. Number two, companies are spending capital I made a typo there. Companies are spending on capital improvements due to the big, beautiful bill. So huge difference. If you're spending money on capital improvements, if you're building buildings, you're buying equipment, you're spending money on CapEx, all these things are now immediately written off, and that drops your tax rate by a ton. And so this is people, in addition to all this onshoring, you've got companies that are spending like crazy right now because of this change. Number three, regulations are being torn up in order to allow a productive flow of the use of capital. They're not waiting, this 10-to-1 thing where you have, for every new regulation, you have to get rid of 10. They're not waiting for that. They're going, every department is under demand by the Trump administration to go through regulations and find any regulations that are stupid, old, make no sense, illegal under the new rules that the Supreme Court set down, and just getting rid of them. They're not waiting. It's not a 10-to-1 thing. It's just get rid of them, destroy these rules, and also take a look at specific industries like nuclear energy, and find ways to get regulations out of the way so we can build up this nuclear opportunity. Number four, energy from all sources ramping, as just mentioned, including nuclear. Number five, inflation dropping. And I said that, yeah, because I'm paying attention to truflation, not to the stupid CPI. Inflation is dropping, will continue to drop with supply increases and productivity gains. That's what happens when you increase supply, when you increase manufacturing capability, when you increase the amount of stuff people can buy, then you get the prices coming down, and also productivity gains does the same thing. Number six, optimism from the top. When you've got this much optimism and this much high energy from the President of the United States and the cabinet, that's catching. People are watching that. They're noticing, oh my gosh, look at this energy. Look, these people are enthusiastic about the future. They believe in America. They believe that the golden age is coming. That's catching. It's true for companies and it's true for the country. And the only thing that's slowing it down at all is the fools on the left who are calling things, continuing. It continues even now. After all this business with Charlie Kirk and everything else, people are still, oh, he's a fascist. Oh, these autocratic people. Oh my gosh, we're going to go into Nazi Germany. It's continuing. It's continuing. It hasn't stopped. Number seven, we're changing the changing of the political discourse in the news from the dumb progressive nonsense in terms of, people and boys using tampons and all the craziness that's going away, and we're getting to a more balanced news coverage because the Republicans, the conservatives are buying up the news. Yeah, it's true. And we're getting a change. We're getting people being red-pilled that own some of the news and some of the social media. They're getting red-pilled. And then you got other news sources that are being bought up by conservatives. Federal spending is dropping to make way for private enterprise, and we're going to get a drop in the deficit. You watch. We're at least going to get a drop in the amount that is of the deficit. We might be going to go into surplus, according to Hassett and others. 9. Finally, interest rates are dropping, and that'll help lagging housing, durables, and trucking. So look for all of those to begin to see positivity in the next 6 months. Fortune magazine says this. Quoting they're quoting leading economist Mark Zandi. Powell's basically saying, I don't think the job market will weaken much further, but just in case, we're trimming. according to Zandy. That tells me he still thinks policy is roughly in the right place. Even with that move, interest rates remain above what Zandy estimates as neutral, about 3.5% today, and likely closer to 3% a year from now. So we're way above neutral. Policy is still somewhat restrictive, he said, not Zandy, Powell. It's not highly restrictive, but it's certainly not stimulative. Zandy says he expects the Fed to follow through with additional cuts in October and December, which could return rates to neutral by mid-2026. But he cautioned that if policymakers fail to deliver, markets could completely unravel from their optimism, putting the economy at risk. By itself, this cut won't stave off job recession, he said. They're going to need to do more. For now, the Fed is trying to signal steadiness. But with the White House poised to nominate a new chair next year, and with Moran's unusual dual role spotlighting the political crosscurrents, Zandy warned the institution's independence could soon be tested. Well, it's not independent now, Zandy. It hasn't been independent. It's another extension of the Democratic Party fighting Trump at every turn. The real tell, he says, will be who gets picked to succeed Powell. And that will tell us, well, it'll be somebody Trump likes and somebody Trump believes is aligned with his policies, not trying to fight him. What sense does it make to have a Fed who's trying to fight the president on his economic policies? It makes no sense at all. All right, Truflation says this morning that the inflation overnight, 2.24, that's a little bit up, but the year over year is at 1.72, so no worries. And the PCE comparison, 2.6. We got the President of the United States at 53%. That is close to the high so far this term and higher than anything since the middle of February. So go president. All right. And we've got we won't have a new number out of the Atlanta Fed until next week. So that is still at 3.3. Let's go ahead and look at where we are this morning. Here we go. Tesla is at 427. That is up 2.47%. Not completely recovering all of the downdraft from yesterday. We should be able, again, we should be, I think, where will we close today? Could close in the 430s, could get to 440 today. The options expiry will probably have more to do with that than anything. That's why I'm thinking maybe 440 is next week, not today. The NASDAQ up 0.44 for another, I'm pretty sure that's a new record. S&P not quite at a record, up 0.21. Dow Jones up 0.17, but all very, very solidly up this morning. The Magnificent Seven all up except for Meta. Everything's up. The VIX is up just a teeny tiny bit, but sitting at 1572. That's a good number. And then we've got the Cathie Woods, which this morning are mixed, but as you can imagine, 𝐼𝐸 and 𝐼𝐸𝐺 are both up nicely since Tesla is up nicely. All right, and let's go ahead. And the bonds, last time I looked, the yields are up, unfortunately. But let's see where we are. Whoops, I just hit the wrong thing. And here we go. The bond yields are up 2 basis points to 4.124. It was worse earlier this morning, so we are coming down compared to where we were. Here's my guess on the bonds. I'm saying bonds are a buy. You know, I don't make these predictions more than, I don't know, every day. No, but bonds, I've been saying for a while that they've been a buy. I'm going to say right now they're a buy. That's not investment advice. It's just looking at this stuff every day, looking at it for, 55 years. I think bonds are right now, they're a buy. They're going to 3.75 and not in the long term, but rather in the short term. Oil is sitting at down another 17 cents to 63.42, kind of back where it was before a bunch of things this week. Okay. We've got natural gas down 1.12 to $2.90 again. We're down well below $3 again, which is kind of, again, where we were a week ago. We've got gold going back up again now. 1890 up today, 3697. Silver up 1.33, shooting for its all-time highs again. And copper up a little bit, 0.29, $4.56. Again, kind of going in the direction it was. Yesterday was kind of this day, where everything went the opposite of what has been going on. Okay, we have got the dollar up against all currencies that are I'm just looking at. We got Bitcoin down 11.99 to 116,249. So backing off its current run, it's the run that we've been looking at. And Ethereum is down 1.39 to 4,531. All right. So later today, it'll be Larry Goldberg and probably I don't know. As same as last week, it could be Brian Wong, it could be CERN Basher, it could be Phil Beisel. All three of those will be between that tonight at 7:45 and tomorrow and Sunday. There'll be probably one of each of the, well, not only, yeah, almost certainly one of each of those. And I just don't know which one it'll be tonight, but it'll be one of those three, which therefore will be amazing. Now, last night, CERN Basher did the first part of his two parts for this weekend. If you didn't see that, well, what are you waiting for? You got time right now. Go check it out. I put the card right there. That's all I got for you right now. Oh, should we check and see? Yeah, let's take one last look. One last look real quick here. We have got Tesla up 2.45 at 427.04. We'll see how that works out later today. It's been great talking to you.